Hello traders, thank you for joining me on another exciting tutorial here, and this is for pending order. Okay, my name is Emmanuel Odogwu. I'm a financial analyst and also a technical analyst with Rally Academy. Okay, please do well to visit us on any of our physical offices, and if you have not funded your account, please also do well to fund your account so that you can start trading and also start making money for yourself. Also, please also do well to follow us on our social media platforms. Okay, all right, and also do well to follow me on social media platform also. All right, so let's get started. This video is on penny order and it's strictly and it's only for the phone. Okay, so I've already done the one for the laptop. Okay, MT4 on the laptop, so you can check my channel on YouTube here. You can see the video on the laptop, but this one is for the phone. Okay, let's get started, please. All right, so this is penny order, and penny order is a way of placing a trade or placing an order that will trigger later. So that means it is not entering the market directly. Okay, that means you place an order, the order is not yet on the market until certain conditions are met or fulfilled before the order can be triggered. Okay, so they are listed here: the buy limit, okay, the buy stop, the sell limit, and also the sell stop. Okay, please also still do well to follow me on all of these social media platform. Also, this video is brought to you by Rally Academy and also from Emmarextrade. Okay, so let's start. But before we talk about pending order, let's start from market orders. So market order is simply you placing an order on the market to either buy or to sell, and of course, you do that in order to make profit for yourself. All right. Now there are two types of market orders. They are main order, and of course the sub orders. So main orders are the base orders. They are the first order to be executed in the market. Then the sub orders are orders that cannot stand on their own. Okay, so they will need a main order to stand. So the example of sub orders are the stop loss, and of course the take profit. Okay, now let's focus on main order, please, so that we can actually move down or narrow it down to our pending order. Now, talking about main order, we have the market execution order, and we have the pending orders. Okay, now the market execution order is also known as instant execution. It is simply you placing an order on the market that will be executed instantly. That's why it's also called instant execution. So the reason why it's called market execution is simply you placing an order to buy or to sell at the market price. So whatever is the market price, for example, say gold price is 1,750 ounce, 1,750 US dollar per ounce, right? And you decide to buy at that particular price with the hope that the value will appreciate. So that simply means you're buying strictly at the market price. That's market execution. Then, of course, maybe you have done your analysis and say, no, this price is so high for me to buy because every trader wants to buy at the lower price and sell at a higher price. So you want to wait for the price to come to your preferred price, to your choice price. Then you're going to use pending order. Okay. Now, on the pending order types, there are different types of pending order. Let's look at them. The first one, we call it the buy stop pending order. So buy stop pending order is very simple. It is simply placing a buy pending order above the current market price. Take note. Now, buy stop is a buy, but then it is only going to be located above the current market price. So you have looked at the market is down, and then you have anticipated, you have analyzed that the market is going to go up or is going to move up. Okay, so you want to go to that very up price, that high price, to go wait for it. So waiting for it, you have to use buy stop order. Then also the second one is the buy limit order. Please take note. Buy limit order is simply placing a buy pending order located below the current market price. Now the difference is they are both buy trade, right? But the buy stop is located above the current market price, okay, on your phone. Then the buy limit is located below the current market price. So in this case, you have analyzed and you want a cheaper price to place the trade. Of course, you want to buy at a lower price. So let's say the price is high, but you want to wait for the price to come lower. Let's say Euro USA price is high. I want to wait for the price to come lower. In doing so, you have to use a buy limit. So buy limit, you go place the order below the current market price so that anytime the market price comes down towards that level, it will pick your buy trade. And of course, you are now in the market to make profits. Now, the next one is the sell stop. So sell stop is simply placing a sell pending order below the current market price. Okay, now sell stop is a sell, but the position must be located below the current market price. That means you have seen that the market price is going down, it's moving downward. Okay, but you want it to pass a particular level. Say that level is a support, so you want the price to break through that support before you can continue selling. So you want to go wait for it, so you can use a sell stop and place the order below the support, so that once the price goes down and breaks the support, you can pick your sell trade, and then of course from there you are now on the trade. Now the next one is sell limit pending order. With the sell limit pending order, it is simply placing a sell pending order located above the current market price. So take note, please, both the sell stop and the sell limit, they are both sell trade. But the difference is the sell stop is located above the sell stop rather is located below the current market price. The sell limit is located above the current market price. Say you want to sell and the price is low. You don't want to sell at that low price. You want to wait for a better price, and a better price you sell is to sell at a higher price. So you can go wait for it with above here. I mean, you can go above the current market price and place the order at a resistance such that whenever the price touch that resistance, it will pick your trade, a sell, and then you are now on the trade. Now, with all of these different type of pending order, you can as well add stop loss and take profit to it, so that once the trade is triggered, the stop loss can protect your account, and of course the take profit can also protect your profit on the trade. All right, so with all of this being said, I hope you understand it. Of course, this is a video, so you can pause or you can rewind, go back and listen again, because the more you hear, the more you watch it, the more you understand it very well. Okay. All right, so let's jump right into the chart, okay, so that we can practicalize all of this on the chart. And of course, we're doing this on our phone. All right, then. So let's open MT4 on the phone for now. All right, so we are on the chart right now, and this is the MetaTrader 4 on the phone. Okay, just like we said, this pending order is on the phone, and we have the one also for the laptop. So on the phone right now, this is European Euro versus the Japanese yen. And of course, this is a chart on H1. Remember, before you want to do your pending order, you have to analyze the market force. So you don't just do it anyhow. No, you don't just place buy stop, buy limit, sell stop, sell limit. No, you have to analyze the market force so that you can tell the best place to either buy or to sell. Knowing the best place to either buy and sell is what normally leads to you choosing your preferred price. And choosing your preferred price is what is that is the main reason why we are using pending order. Okay, now please from this my chart, you can see I have moving averages, which I normally use to know the trend of the market. So this black one is the 200 period moving average. As you can see, the price has been trading above the 200 period moving average. Each of these columns represent activity on the market for one day. So for some days, even more than a week plus, the market has been trading above. So trading above means the market is on an upward trend. Okay, and therefore I want to look for opportunities to buy. But remember, looking for opportunities to buy, you want to only buy at a low price, sell at a high price. Okay, so if the price has gone up, okay, let me zoom in a little bit. If the price has gone up as much as this high, so it's not a good place to buy. Even though I want to buy, it's not a good place to buy. I'll have to wait for a lower price. So let's say the price is somewhere here. I'll have to come down somewhere down here on this moving average, right? Because it will act as a dynamic support for the price. So let's say the price is somewhere here, trading at this level. So I can come down here and use a pending order to wait for it to continue the buy. So anytime the price moves down to this level, it will pick my buy right? And then continue going up to give me more profit. Okay, so that is the use of penny order. So let's do it. Now, as you can see, the price has traded high, very, very high. So at this very high point, it's not a good place to come and place your buy. If you place buy at this point with market execution, it means you're buying at a high price. And you don't want to buy at a high price. You want to buy at a low price. So this price is high, whereas somewhere down here is low. Why am I pointing here? Look, around this price is it was a previous resistance. So the market coming down, down, down to this level will make this level now a support. So remember, the trend is on an upward trend, so we want to buy, but we want to buy at a lower price. The market right now is trading at, look at the price, I'm hovering the pointer on it, 140.932, 140.932 yen. So 1 euro is going for 140.9927 yen. Okay, but that's a high price. I don't want to buy at a high price. I want to buy at a lower price. So somewhere down here will be a lower price because it's on the support. Somewhere around here to be precise. Okay, let's use this one, please, to make it very easy. 140.225, 140.225, 140.225. So I want to use, so you may want to write it down. We are buying, we tend to buy, right, at 140.225. So please, while watching this video, you want to carry a pen and a paper to write it down. 140, this price 140.225. But take note, this price we are pointing right now is lower than the current market price right now. It's lower. And since we want to buy and the price is lower, therefore we're going to use, guess what? We're going to use buy limit. So we're going to do a buy limit at this point, 140.225. So that anytime the price comes down towards this level, it should pick our trade. So if we're using this level as our buy limit, so the take profit, of course, is a buy, has to be above, right? The take profit has to be above, somewhere up here. So we can use this price as our take profit, right? And then, of course, the stop loss has to be below. So we can go below this moving averages. We can use this 139. So let me just write it down. So the take profit, just to make this video very short, let's not go into calculation. Okay, so I'm using 140.725 as my take profit. So from 22 to 72, that's 50 pips. So 50 pips take profit there. Okay, remember this last digit here is the point, so we normally ignore it. So this is 22. So 140.725, that's 50 pips. Okay, now let's do a stop loss of let's say of the same 50 pips. Okay, or we can use below, or we can use below this moving average. Okay, below this moving average, 139.245. Okay, so you just click on new order here. This button is new order at the top right. You can see a SIM card button there with a small plus inside. So you click, then you furnish your lot size. Let's say on this trade I want to do a 0.04. okay, so where you see the instant execution there, you click, and then you have all your pending orders here. So we are doing buy limit here, and of course this is a place where you type in the price you have selected. So I intend to buy, I intend to place a penny order at 140. You bid on to type. So once you click inside this price, your keyboard is supposed to appear while doing it on your phone. So then you type 140.225. Now by clicking this place, you can just go ahead and place it immediately. Now it will work, but then there was it will go without your stop loss and the take profit. Now this, if you look carefully, there is a red underline here, it is for the stop loss. There is a green underline here, it is for the take profit. So the take profit, I will just click inside here, then I'll type 140.725. That's my take profit. I intend to use a stop loss of 139.245. okay, now just click on place. Order is in the queue. order is open. So I've placed the order. So it will look like this on my trade tab, right? So that means looking like this means it's not yet running on the market. It's simply a pending trade or a pending order or a trap on the market waiting to happen. Okay, so if I touch the trade, you can see clearly that it is a pending order. It's a buy limit pending order is showing there of the size 0.04 at 140.225. Okay, so this is the price I have set for my buy limit, right? And this price is what will later become the entry price. Okay, now this price at the far right is the market price. So once this market price is higher than this price, you can agree with me. Okay, so once this price comes down and down towards this price, it will trigger this trade and it will change from a buy limit to now become a buy trade. And of course, our stop loss is there, our take profit is also there. Let's look at it on the chart. So you can swipe the trade there, and then you click this, and that is the chart. So look at what we have just done. This is our buy limit here of 0.04. So this is where we pick as our take profit TP, and this is where we pick as our stop loss SL, as you can see. All right, so that's just it. Very, very simple. Okay, now let's do for the this for the buy limit. What about the buy stop? For the buy stop now, let's look at another instrument we can use for our buy stop. Let's look at Euro GBP for our buy stop. Okay, so on this Euro GBP, let's look at buy stop here. You can see by and large the market is on an upward trend. So let's do a buy stop here, please. So doing a buy stop here, buy stop means I want to continue buying on this upward trend. So but until certain conditions are fulfilled. So let me buy if this market can trade above all of this moving average, because all of this smaller moving average, the market is trading below it. So I intend to buy if this market can trade above this level here. So if this market can trade above this level, you can see this level, then I will buy. So if this market can go because this level shows a rejection to the upside. So if market can go trade above this level, I will buy. Okay, so the price at that level is 0.86560. So you want to write it down. Buy at 0.86586 0.86 okay 550 0.86550. So I intend to buy at 0.86550. I intend to use my take profit at a price higher than that one, 0.86760 0.86760 TP. Then I tend to use my stop loss. Remember, I'm buying at this price. I'm showing you, because this price is higher than the market price, so it's a buy stop we're going to use. There a stop loss at 0.86340. 0.86340. Please, just like I said earlier, you want to have a pen and a paper to write down this price so that you can do it practically and understand it for yourself. So I've taken down the price. Once again, we are placing a buy order, buy stop order at 0.86550, and I'll take profit at this price, then I'll stop loss. Okay, quickly, let's do it. So once you have gotten your prices on the chart, you now click on this button at the far right. That's your new order. You click, then you see at the top here, you either see instant execution or you see market execution. So you have to click on it, and then you have to choose buy stop. Okay, so this is the second time we're doing it. So it's asking us for the price here. So once you click inside here, your keyboard will appear doing it on your phone. Then you have to type the price you intend to buy. So 0.86550 there. Then of course the take profit price 0.86760. Then the stop loss there at 0.86340. Okay, now please don't forget, buy stop, you're buying above the market price. This price will peak to use as our buy stop is actually a price that is above our current market price. So I'll just click on place, then you wait for it. Order is in the queue, and after that order is open, of course it takes us to this trade tab. So this was the first one we did, and this is the second one. So you can see we entered this trade at 0.04 at 0.86550, and this is the market price right now with our take profit and stop loss. Remember, anytime you are setting a pending order, you always want to set your stop loss and your take profit alongside with it. Let's look at the chart and see what we have there. So this is the chart here. So look at what we have just done. We have said this is where the market price is right now, but we are saying if for any reason this market price should continue trading on this upward trend, right? If it move up and up and up, if it passes here, nothing will happen, right? Because this is the sub order, it's not the main order. So if it comes up to this main order of buy stop, it will trigger a buy to change for being called a buy, so it will not become a buy. And of course, then if it goes up further, this becomes our take profit. And of course, this is a stop loss to protect the account. So I want to believe you understand what we have just done. Okay, now we have done buy limits, we have done buy stop, remaining sell limits and sell stop. Now let's go back to our quotes here, and let's do for sell limit and sell stop. Let's open AUD USD here and see what is happening there. Now this is AUD USD. Okay, now from what we can see, the market is trading lower, right? The market is trading below our 200 period moving average. That suggests that the market is on a downward trend. So the market is actually on a downward trend, as you can see. So on a downward trend, you want to look for opportunities, of course, to sell. Just imagine if you have been selling for days. As long as it's below this 200 period moving average, you have been selling. You have been selling. You have been selling. Of course, you'll be making profit. So that's what you want to do. You want to continue selling. But why selling? Remember, you want to sell at a high price. For example, see what I mean? The price was here some hours ago, right? Because this is H1. That means each of this bar is activity for one hour. So the price was up here some hours ago, and after 1, 2, 3, 4, 5, 6, after quite a long period of time, the market has moved down. So that means this price is a high price somewhere here. This price is a low price. That's what I mean. So if you want to sell it at this price is the best price to sell. Of course, that qualifies to be a resistance. All right, so we want to sell now. So, but I wouldn't want to sell here, right? I want to sell at a higher price. So if this market should come up again towards this level, I would like to sell. So at that level, that will become a sell limit there at 0.68260. So I am selling at 0.68260. I intend to sell at 0.68260, and of course while selling, your take profit should be lower. So let's do a take profit at 0. This other price 0.68 0.68020. Okay, this price for our take profit. Then since we are selling at this price, our stop loss just above our 200 period moving average, that will be 0.68500. 0.68500. So I've taken down the price. Please, you can always pause, okay, rewind and play it again to follow up very well. So once again, we are placing a sell at 0.68260 here, and we tend to do our take profit a price lower than that price, 0.68020 here, and we tend to do our stop loss at 0.6850. So we've gotten all of this price on the chart. So the next thing is to click the new order at the top right there. You click, then of course you furnish your lot size. Let's say on this trade I intend to do a 0.05. okay, then this place where you see instant execution or market execution, you click, and then you choose, we are using a sell limit because we are selling at a price that is higher than the market price. Okay, so you type in the price you intend to sell at, so that's 0.68260 there. And of course, don't forget this place is for your take profit. So our take profit price will be 0.68020. Then our stop loss would be 0.68500. So we have furnished all of the prices we need. Then I'll just go ahead and click place. Order is in the queue, order is open. So this is the third pending order we have set. The first one was we did a buy limit, we did a buy stop, and now we have just done sell limit. So same thing, this is the lot size, this is the price we choose, right? That will later become our entry price, and this is the market price. So we are saying if this market price goes up and up and up and touches this price, it will trigger a sell for us with our stop loss and take profit in place. Let's look at how the chart looks like. Very simple. So look at what we have just done. We are saying if this market, because the first time you notice it's when it retraces up to this level, let's say there was a sell limit here, to pick your sell trade and goes down to give a profit. The second time it retraces up to around this level, let's say there was a sell limit here, to pick your sell trade and goes down and give a profit. The third time it retraces up towards this level, let's say there was a sell limit here, it will still pick your sell trade and move down. So we are saying even this fourth time, if this market retraces up towards this level, it will pick our sell trade, right? Because this is where we place our sell. Then of course it will pick the sell trade here, right? And then going down becomes profitable for us. So this is it. You can see it. Look closely on your screen. You will see sell limit there, 0. Let me zoom in so that it will be bigger. Okay, it's bigger now. So 0.05 sell limit there. So this is the take profit, and of course we have the stop loss up here. Now this is for sell limit. The last one is the sell stop. So for sell stop, you intend to sell at a lower price. So if the market has broken through all of the supports, now this market is heavily going down, okay? But as we can clearly see here, this market has been rocking a support. How do I know it's a support? The first time the price came here, it could not go lower, it moved up. The second time it moved down, it could not go lower, it moved up. The third time it's rocking that same level, that same price. So that qualifies to be a support. So how do you sell stop? Sell stop means I want to continue the sell, but not on this level. So I want to go to a lower price to sell. Okay. So let's say if this price can go below this level, can touch 0.67540. If the price can go below this level you're saying here, right? It can break that level. So by the time this price touches this price, we can say it has gone below. So 0.67540. So I'll write it down. 0.67540. If this price can touch 0.67540, I will say the market will continue to go down. Okay. Then of course, since it's a sell, our take profit has to be lower. So let's use 0.67. Let's use a 30 pips take profit, becomes 0.67240. So going down by 30 pips. Then of course, let's use a stop loss of the same 30 pips, becomes 0.67840. Let me call the prices again. We intend to sell at this 0.67540. So going lower becomes our take profit of 0.67240 is lower than this price. Then of course our stop loss becomes 0.67840. okay, 840 is somewhere above this level. So let's do it. So I'll click on this plus at the top right. Remember this plus is called new order. I will click. Then let's furnish. Let's say on this trade I want to do a 0.05. okay, no, let's say 0.06. okay, let's change it. So I'll click here and I'm going to use, remember we have done buy limit, we have done sell limit, we have done buy stop. So let's do our sell stop. I'll click sell stop here and I'll furnish the price here. So what price are we typing there? So we are using 0.67540. 240. So we are saying if this price can go lower to this level, so pick our sell trade for us. Then our take profit price, we said, is going to be 0.67240. Then our stop loss price to protect our account. The take profit is used to protect your profit. The stop loss is used to protect your account. So that becomes 0.67840. Okay. So having typed all of this, we can now click on place. So we have clicked on place to place the trade. So you can see we have done all of the 4 different type of penny orders here. We have done the sell stop just now, and we can see we use 0.06 there, and this is the price we picked, and our take profit and stop loss are in place. All right. So all of these trades are not yet on the market. It is simply placing a trap on the market that if the price gets here, even though I am busy, right? I'm busy with other things, I'm doing some other things, and I'm not on my system, I'm not babysitting my system, your trade can still be triggered, and of course you can come back and come and see profits. Okay, so but guess what, if the market conditions have changed, right, and then what you saw before you place the trade, all of those parameters, all of those things have changed, you can as well come back to delete it if it has not been triggered after some days, right? So how do you delete it? You long press, you click and hold it, you click and hold it, then you get all of this option. Among all these options, you click on delete order. So once you click on delete order, then you'll be deleting it. Okay, all right, let's go to the chart and see how this AUDUS this sell stop looks like on the chart. So I'll click the chart here. So on this chart, you can see we have said if this price can trade to this level, it should pick our sell for us here. Then the stop loss should be here. This is the stop loss, and of course we have the take profit down. Let me reduce the zoom so that we can see the take profit. So the take profit is down there. Okay, all right then. So please, this is how we set penny order on the phone. Okay, on the MT4 on the phone. All right, so it's very, very simple. Please, let's say there are areas you don't really get, so you can just go back and of course watch the video again. All right, guys, thank you very much. This is Emmanuel Odogwu, Emmarextrade. Okay, so please try and maybe watch other videos, how to place trade, how to put stop loss and take profit if there are areas you don't really understand. Okay, so this is where we sign out for now. Thank you very much. Bye for now.